Today is October 22nd, 2025. It is 9:02 Pacific time as I'm recording the video, and the US 10-year Treasury yield, the chart that runs the entire global chessboard, is pressing into a critical breakdown zone, trading around the 3.97% handle. Yields are pinned against this lower channel wedge, but the bond market has been whispering of a slowdown long before equities wanted to hear it, and every rally that has melted up into the descending price wedge resistance level has been sold into, and now we are sitting right on top of a major support shelf near the 390 and or 390% handle, with the RSI oversold, stochastics completely crushed, and momentum bleeding out. This is the classic moment where the bond market either dead cat bounces or opens up a trap door, where the fib ladders have lined up perfectly around these key inflection points, lose the 390% handle, and we fast track into the 3.75 realm, or maybe even a 3.6 handle where the real base sits. This is a pure bounce or break key inflection point. If the 10-year bounces, tech cools. If the 10-year breaks, risk assets go into melt-up mode, where stocks and gold could rip, and the dollar DXY could begin to soften, where liquidity flows and the market pretends the future is safe again. Although the structure here is still technically bearish off this violent, volatile downtrend, yields are signaling one thing: that the bond market does not believe the growth narrative, and it is quietly pricing in a slowdown that the equities have continued to acknowledge. A breakout above the descending price resistance level and the 410 price resistance level, and the bulls get a heartbeat. Below the 3.9% handle, and we could enter a realm of forced macro truth. Because when yields fall like this, it isn't because the system is healthy. It's because the system is begging for morphine. And the 10-year isn't just a line on the chart. It is the EKG of the global machine. And right now, the heartbeat is beginning to slow. Either yields bounce and we buy a little bit more time into big tech earnings, or they break and the truth comes rushing in. And the bond market always speaks first. And the question now is whether anyone is listening.